Hey guys, welcome to another episode of Living in Northern California. Today we have our good friend Eric Berg. Hey Eric, how are you?
Great. How are you both doing?
Doing
amazing.
good.
We're so happy to have you today, and we've been working with you for a while. And every time we talk to you, just full of knowledge. And one thing we want to start doing with this channel is just really educating people from the experts on what's going on out there, what kind of programs there are, what's happening in the market. There's just so many things we could talk about. So that's why we have you today. And thank you for joining us.
Yeah. So today Eric's going to talk about, we're going to talk with Eric about mortgage rates and where they're heading, what it looks like with the real estate market, and some of the things that buyers, specifically first-time home buyers, can take advantage of to get into the real estate market. So super excited for that.
I want to start off with Eric. You can't help but everywhere we turn, every conversation I hear is what's happening with interest rates. Are they going to continue to go up? Are they going to go down? What's your take on it? Do you have any take on that?
Yeah, thank you so much again for the time to speak with you, and yeah, we're happy to help out with educating prospective home buyers out there. There's a lot of information that they need, and so yeah, mortgage rates are definitely a hot topic today. We've seen a lot of fluctuations in it. I mean, recently they have inched up, generally speaking, back above 7% in some scenarios. So, definitely it's a struggle in the market in terms of where mortgage rates are. But the thing that's a couple of things that are really impacting mortgage rates right now are, number one, economic data. As long as the employment or jobs market stays strong, it gives the Federal Reserve ample reason to continue to either raise interest rates a bit or keep them elevated for a longer period of time. So the Federal Reserve keeping rates elevated is one thing that is keeping mortgage rates up. Another thing that we've seen that is obviously keeping mortgage rates up is inflation. Now, it seems like inflation data is improving, which is good. So we expect, potentially for mortgage rates to come down as inflation cools off. And then lastly, with some of the recent banking crises with like First Republic Bank out here in California, as these banks ran into trouble, they've had to sell mortgage bonds on the market. And as the mortgage bond market gets flooded with mortgage bonds, that actually moves interest rates up. So you have all these factors that are kind of all working together. They're pushing mortgage rates up.
There was something last week about like the debt ceiling as well, and trying to figure out a negotiation with that. So I keep hearing all these like timelines as far as like when we would see certain things happen. We actually have been following like inflations and the CPI numbers, and we've heard that first it was in May where we would see like home depreciation that's going to be included in CPI numbers. Now like the debt ceiling is another topic, so it's kind of confusing, emotional roller coaster for people. So with all that said and done, and all those factors that people are having to look into, do they still think that rates would get back into the lower, maybe like in the 5s still, or is that not sure anymore because of all the things going on?
Yeah, and you're right. That's all of these different factors kind of coming into play is why we've seen like fluctuations with mortgage rates. I think the general consensus is that mortgage rates will come down. It's more a matter of when. I mean, I think some people were pretty aggressive thinking that we would start to see lower rates this summer, and that could still happen. Some thought maybe the Federal Reserve might start dropping rates later this year. That is possible, but they're kind of indicating that maybe it's less likely than previously thought. Again, the consensus seems to be that mortgage rates will come down as inflation data improves. And then you have these short-term kind of shock factors like the debt ceiling. Fortunately, it seems like the politicians are moving towards an agreement which will, settle markets down. And we've just seen even in the last couple of days that things have improved compared to last week.
I'm hearing the date June 5th with that.
Yeah, they need to get a deal done here. So they don't push that date.
Yeah, for sure.
Anything that creates uncertainty in financial markets tends to move, in a case like this, can move mortgage rates up. I mean, there's other shocks that move mortgage rates down, but the debt ceiling thing is definitely not settling for financial markets. So I think as that settles, gets squared away, hopefully this week, then markets will settle down a little bit and move beyond that.
Yeah.
Nice.
Good.
Yeah.
All right.
So we have, man, we have a lot of people reaching out to us, and a lot of them are first-time home buyers. I'd like for you to possibly touch on some of the programs you offer to people that are just getting into the market in this hectic market that we have.
Mm-hmm.
Go ahead and touch on a few of those.
Yeah. So again, thank you for the time to speak about this. So there's several different loan programs that offer different minimum down payments. For example, an FHA mortgage is a 3.5% minimum down payment in most cases. Conventional financing can be as low as 3% down. There are programs through the California Housing Finance Agency that provide down payment assistance. So each of these have a role in helping local buyers in our local market. What we're seeing buyers really get attract to are finding a way to get into a house with, minimizing funds out of pocket, and monthly payment is a big driver of everything. So in this, we are seeing a lot of success in buyers getting credits from sellers that can be applied towards their closing costs. A credit from a seller towards a buyer's closing cost allows buyers to keep cash in the pocket at closing. That might help subsidize payments going forward. It just benefits buyers significantly. Also, buyers, if a seller is willing to contribute funds towards closing costs, can also get temporary interest rate buy downs. One example would be like what they call a 2-1 buy down. So a buyer gets 2% off their interest rate for the first year and 1% off the interest rate for the second year. This is all subsidized by the seller, and reduced interest rates of that magnitude really help buyers in their cash flow. Everything's about cash flow and having funds in pocket after closing. So we have all sorts of tools, ways to go about this. We really look at it case by case, but it is so beneficial for buyers if they can buy a house, maintain funds in their bank, and reasonably afford the payment going forward.
Yeah. I've been hearing a lot about like seller credits and being able to do buy downs and stuff. What are your thoughts on like prices? So I know I've heard people, a lot of buyers may want to ask for a price reduction, but then I've heard from industry experts in the field that are saying like, no, don't ask for a price reduction. Use that money to get a, seller credit so that you can have a rate buy down. What does that look like, and how does that benefit a buyer?
If a buyer, for example, is putting like a 5% down payment, for example, getting the seller to reduce their price a little bit, as opposed to keeping the price the same and getting the seller to credit the buyer for the same amount of the price reduction, that credit significantly benefits the buyer a whole lot more, because they can either save the money from closing costs, keep that cash in hand at closing. When a buyer's putting a 5% down payment, if they reduce the price, it has very little impact on their monthly payment because they're borrowing the majority of what they're paying. So seller credits go much further for buyers compared to the same amount of a price reduction.
Yeah, because then that could go to like the rate buy down, and they can save a lot more money in the long run that way.
That's correct. Yeah. So
very cool.
Eric, this is a lot of great information. I feel like we should possibly have you on again. And do you mind coming on again and just break down some of these programs in more detail? I'd like people to leave comments and whatever your questions are for Eric, we'd love to have you back on and just break those down. Would you be willing to do that?
Of course, we'd be happy to do that again. For sure.
Awesome. Yeah, and then we'd love to leave your contact info, but how can people get a hold of you?
The best way to get a hold of me is directly. You can call me at area code 510-334-8847.
Yeah. And one of the things I do love about Eric is he always answers. I will text him like any time of the day and he has a response for me. So thank you for always being available for us and our clients. All right. Awesome, guys. So thank you guys for tuning in. If you guys have any questions, please make sure to reach out to us. If you have any lending questions, Eric is available. And if you guys have any questions on, anything going on here in Northern California, you know how to reach us.
Yeah, leave a comment. We'd love to keep this segment going and answer all your questions. Again, Eric, thanks for joining us.
All right, guys. If you're new to our channel, make sure to give a little love. Come on, Eric.
You got to put a love. There you go.
To that subscribe button and click on that notification button so you can be the first to hear about cool things like all the information Eric's giving us today. So we'll catch you guys on the next video. Bye, guys.
See ya.